So, on the US all sports since the beginning of this week, remember we have been selling this asset, giving us a whooping of approximately 1,000 pips as we had multiple entries throughout the course of the week. Now, oil prices are struggling to recover significantly during the Asian session, marking the third consecutive day of defensive price movement. However, the lingering concerns about diminishing demand in the US and China, the world's top consumer of oil, of course, are exerting downward pressure on oil prices. Now, this economic factor lean towards a bearish outlook, indicating that the path of least resistance for crude oil prices is to the downside. However, in today's session, we are going to be looking at things from a technical standpoint to see if the market has a tendency of doing some rebound or retracement today, or will price action continue to the downside. Now, before we go into the details here, let's run through, and for the sake of those who are joining us for the first time, let's run through how we started the week and what led to the decisions we made. So at the beginning of the week, it was more of a consolidation phase, remember, which led to a buy position for us. Remember, we saw price action initially confined within the $81 level and the $80.68 area to emphasize the level of indecision at that particular point in time. And of course, you know how we do it in this community, especially when price action falls into such a range. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. In fact, at the beginning of the week, it was more of buying this asset as we saw the breakout of the resistance line. And I made mention that for those of us who missed out on that opportunity, a buy limit at that entry zone will give us another opportunity to join. So we saw this happen. Price moved about 100 pips in our favor before the bearish momentum came in, taking us out of that position. Now, as we continue to monitor price action, remember we identified the support line here. We said price breaking down the support line will welcome selling opportunities, and since that moment we have been selling the US all spots. And remember, we also had the privilege of adding more sell positions as we identified levels such as the $80 area. We also had it at the $78.80 level. We also had it at the $78.15 area, and in fact, during the live session yesterday, we looked out for more opportunities at the breakdown of the $76.80 area. So it was quite a tremendously profitable week for us all in this community on the US oil spot. And for those of us who took advantage of these opportunities, well done and kudos to you for being on standby to capitalize on that move. Now, with the way things are going right now, I'm already out of all the sell positions. As you all know how we do it in this community, we move our stop losses accordingly, secure the position, and if you see what has been going on here since the later part of the New York session, we begin to notice some buy pressure come in, taking us out of that position. And for those of you who are still in a sell position right now, I will advise and encourage you to secure all position or probably get out of this trade at this point in time, as we're beginning to notice some bullish traction gradually unfold on the chart. Now, with that being said, and with a well secured position, what is going to be our plans ahead of today's trading session? Are we going to continue buying are we going to continue selling the US all spot, or are there chances that buyers could come in maybe to do some profit taking activities in the form of a retracement on the chart? Now, before we go into the details here, and for the sake of those who are joining us for the first time, I do want you to be on the same page with us. So we shall be scaling up into the higher time frame to see what we saw from an holistic standpoint that made us to make the decision we made during the beginning of this week. Okay, I think I'm having some network issues here. Okay, all right, I think it's right back on. All right, so here we are on the daily time frame. This was where we started our analysis for this week. Now, one of the things we saw here, which was a major factor on this current market structure, is that $80 area, which has been a level, or let me say a zone, which had played a major role in determining the direction of price action since the beginning of this year. And in fact, prior to the breakout of the structure in the month of August, we saw how that area around the 80 and the $85 area was serving as a strong selling niche, giving us an indication that this was a seller's territory. And finally, we had price broke out of the structure in the month of August. Price came up. It was serving as a demand zone. And during the course of the week, we saw price action break down the $80 mark one more time, bringing price back into the seller's territory. Now, going into today's trading session, how do we intend to capitalize on this? Well, yesterday, if you remember, I made mention that are we likely going to be seeing price do a retracement? You know that whenever price breaks down a key structure such as this, we expect price to come back, retest the structure to incite a downtrend scenario. Now, is this going to be the case today, or are we likely going to be seeing price drop further to the downside? I want to show you something on the 4 hours time frame before we scale down into a much more lower time frame. Now, on the 4 hours time frame, what we did here was to take into consideration the nature of price action throughout the month of October. And if you look at the structure closely, you will see that despite the impulsive bearish leg that pushed price into the $80 zone at the beginning of the month, we saw how that area around the $80 mark served as a demand zone for participants in this market, as we saw how sellers found it difficult to break through this area. You saw what happened here, we saw what happened here, and in fact, we saw what happened during the last week of the month of October, stroke the early days of this month, and finally, we had the breakdown of the $80 mark. Now, in addition to that demand zone is this descending trend line, which captured this market in the last couple of weeks, connecting the series of lower highs, emphasized the strength of the sellers, leading to the breakdown of that demand zone. Now that price action has broken down the demand zone at the $80 mark, we expect that some point in time price will come back to retest the structure, maybe in anticipation of a downtrend continuation, or probably break out the trend line to incite an uptrend move. Now, with the way things are going right now, in the last 1, 2, 3, 4, in the last 16 hours in this market, it's quite clear that the $75 area had become a barrier for sellers. As you will see, sellers have been finding it difficult to break through that level. Now, the question going into today's New York session is, will this become a platform that will incite a retracement back into the $80 mark? And if we look at this closely, this will be giving us about a minimum of 400 pips to catch here. So if this is going to be the case, then definitely we want to be looking out for reversal setups on the lower time frame that we will use to validate this and join the bullish momentum to the upside. And in fact, if the contrary happens and instead price breaks down the $75 mark, then we want to be getting ready to sell. Now, with the information we have gathered on the 4 hours and daily time frame, let's scale down into the 1 hour time frame, where we will be able to see how market participants have been reacting to the structure since the beginning of this week. Now, if we zoom into what has been going on in the last 4 days, you will see here that the first thing I did was to acknowledge the bearish momentum. And to do that, I connected the series of lower highs, giving me this beautiful descending trend line to work with. And you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling. And we are not going to be buying unless price breaks out and breaches the descending trend line. And if we zoom into what has been going on here in the last 16 hours, we begin to see something interesting gradually unfold on this chart. The first and first here is the lowest point price action has gotten to for this week is the $74.90 level. And since price tested this level, we have seen a situation here where price has been confined within the $75.85 level and of course the $74.90 area to emphasize the level of indecision going on in this particular market. And whenever we see an indecisive phase like this, you know how we treat it in our community here. We exercise patience and wait for either the breakdown for selling opportunities or the breakout for buying opportunities. Now, there is something interesting going on within this range, which I would like to share with you this moment. Now, if you look at this closely and considering the impulsive move that brought us into the structure, you will see here that price action is unable to break down the previous low, hereby giving us a higher low in that regard, and at the same time transitioning into what is gradually looking like a reversal pattern in the form of a double bottom structure. And of course, you know, when we start seeing price transition into a potential reversal pattern like this, the next thing we want to be doing is to mark out the neckline, which we will need to be broken to validate that reversal pattern. Now we have a neckline around the $75.85 level, and one interesting thing about this neckline is the fact that it also shares a confluence with that descending trend line we marked out earlier. Now, if price action breaks out of the neckline at the $75.85 level, price would have also broken out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, a breakout of the neckline is all we need to capitalize on a reversal setup. So there are two ways to which we will be capitalizing on this reversal setup here. Now, for those of us who are profitable on the USOIL spot so far this week, we can afford to leverage on some of the profit we had made so far to test waters around or above the $75.85 area. So having a buy stop order seems quite reasonable. Personally, I already have a buy position triggered, looking forward to price action continuing to the upside. And if price continues to climb up, breaking out of the $76.80 level, we look out to add more positions. We have another level here at the $77.40. We also have a $78.15 area. Now, mind you, all of these levels are areas where sellers could come in again to incite a downtrend move. So as soon as price action gets into all of these levels, ensure you move your stop losses accordingly. Secure the position while we wait and see how the market participant will be reacting to this level. So a breakout retest of the level will welcome more buy positions, but if selling pressure persists and buyers find it difficult to break out of this level, then we might be looking at selling opportunities. So this is how we are going to be capitalizing on buying opportunities for today. So price breaking out of the descending trend line, breaking out of the neckline at the $75.85 level welcomes buying opportunities in this market. Now, in as much as we looking out for buying opportunities, we cannot ignore the potentials of sellers. Now, before I go into what it will look like here before we can start considering selling, please note that you do want to be having your stop losses in place. Very, very important. So having your stop loss right below the previous low seems quite reasonable, which is between 65 to 75 pips thereabout as a stop loss on this current position. Now, for those of us who are joining for the first time, I would ask you to exercise patience and wait for a retest of structure before you jump into any buy position here. Now, with that being said, let's look at what it will look like here that will make us consider selling the USOIL spot. Now, if you look at the structure closely since yesterday, it's more or less like a range. And in fact, the lowest point where price action has been so far for this week is the $74.90 area. So personally, I want to see price action breathe breach the $74.90, that is, taking out all these buy positions here to give me a comfort to sell the US oil spot. So if you are profitable so far this week, if you be part of this profitable journey, you can just place a sell stop order below the $74.90 area. But if you are joining us for the first time, you want to wait for confirmations like a retest of structure before we jump into any sell position here. So it's a simple setup we have here. Our center of focus for today is basically between the $75.85 level and the $74.90 area, where depending on the direction of the breakout will give us a clue into where price is likely going for today. So let's mark these levels out on our chart and use it as a reference point to guide our independent trading decisions for today.